You are looking at $35. That is what your bank charges when you swipe your debit card and your account does not have enough money. One transaction, one fee, $35. In 2024, American consumers paid $12.1 billion in these fees. $12 billion. On purchases as small as a $4 coffee. But here is what your bank does not advertise. A federal rule from 2010 says you have the right to refuse this entire system. One phone call, 5 minutes, $35 fees, gone forever. Most people have never heard of this rule. The banking industry counts on that. Today we break down the rule that protects you, the fight to make it even stronger, and how the banks won that fight last May. Meet Sarah. She buys a $4.50 coffee on the way to work. She taps her debit card. The bank approves it. What Sarah does not know, her account balance was $2. Her rent autopay hit yesterday and she did not check. The transaction goes through. The bank pays the coffee shop the $4.50. And then the bank charges Sarah a $35 overdraft fee for approving a transaction she would have happily had declined. Final cost of Sarah's coffee, $39.50. The bank's profit on a $4.50 purchase, $35. This happens to roughly 22 million American households every year. Most of them do not know there is a rule that lets them stop it. The rule is called Regulation E. It comes from the Electronic Fund Transfer Act. And in 2010, the Federal Reserve made one critical addition. Title 12, Code of Federal Regulations, Section 1005.17. The rule says a bank cannot charge you an overdraft fee on a debit card purchase or an ATM withdrawal unless you specifically opt in, affirmative consent, in writing. Read that again. They cannot charge you unless you said yes. Before 2010, banks defaulted every customer into overdraft protection. You did not know it existed. You did not agree to it. The fees just appeared. After 2010, that became illegal. Every bank has to ask you. Every bank has to get your written agreement. So why do millions of Americans still pay $35 fees? Because when you opened your account, somewhere in the paperwork, there was a form. It might have been called Overdraft Coverage Election or ATM and Debit Card Overdraft Service Notice. You probably checked yes without reading it, or your banker walked you through it in 30 seconds, or it was the default option on the screen and you clicked Next. The Federal Reserve's own consumer testing showed that most people prefer to have these transactions declined for free. But once they opt in, they pay an average of $225 in overdraft fees every year. Here's what you need to do right now, today. Step 1. Call your bank. Ask, am I currently opted in to overdraft coverage for debit card and ATM transactions? If they say yes, go to Step 2. Step 2. Say, I want to opt out. I want all overdraft coverage on debit card and ATM transactions revoked. That is it. They have to do it. It is federal law. You can also do this online. Log into your bank's website, look for Account Settings or Overdraft Options or Debit Card Settings. There will be a toggle. Switch it off. What changes after you opt out? If your account is empty and you try to swipe your debit card, the transaction will be declined. No purchase, no fee. The cashier will look at you funny, but your wallet will thank you. If you try to take out cash at an ATM and the account is empty, the ATM will say insufficient funds. No withdrawal, no fee. That is the entire trade-off. Decline instead of charge. $0 instead of $35. One important note. Regulation E only covers debit card and ATM transactions. Checks, automatic bill payments, and ACH transfers can still trigger overdraft fees even after you opt out, so you still want to monitor your balance. But the most common way people get hit, the $4 coffee that costs $39, that is fully eliminated. So why do banks fight so hard to keep you opted in? Let's look at the 2024 numbers. JP Morgan Chase, overdraft fee revenue last year, $1.028 billion. Wells Fargo, overdraft fee revenue last year, $1 billion. Those two banks alone collected over $2 billion in overdraft fees in 1 year. Now compare that to Bank of America. In 2022, Bank of America voluntarily reduced its overdraft fee from $35 to $10. The result? Their overdraft revenue dropped by $1.4 billion over 3 years. But here's the part that exposes the whole game. That $1.4 billion drop, it represented about half of 1% of Bank of America's net income. Half of 1%. Bank of America proved it. The fees are not a critical revenue source. They are a tax on the people who can least afford it. 16% of Americans earning under $25,000 per year got hit with an overdraft fee in 2024. For high earners over $100,000, that number is under 5%. Overdraft fees are a poverty tax. The banks know it. The data is public. And in 2024, the federal government tried to do something about it. December 12, 2024. The Consumer Financial Protection Bureau finalized a new rule. The rule was simple. For any bank with more than $10 billion in assets, the overdraft fee would be capped at $5. Not $35, $5. Or, if the bank wanted to charge more, they had to prove the higher fee actually covered their costs. Or, they had to treat overdraft like a loan and disclose it under the Truth in Lending Act. Real disclosure, real numbers. The estimated savings? $5 billion per year returned to American households. $225 back in the pocket of every household currently paying these fees. The rule was scheduled to take effect October 1st, 2025. Then the banking industry went to work. The American Bankers Association filed a federal lawsuit to block the rule. Trade groups mobilized. Lobbyists made the rounds in Washington. And on May 9th, 2025, Congress passed a resolution under the Congressional Review Act. The President signed it. The rule was nullified before it ever took effect. The American Bankers Association dropped their lawsuit the same day. They had already won. Here is the part that should make you angry. Under the Congressional Review Act, when Congress overturns a federal rule, the agency that wrote it is permanently barred from issuing a substantially similar rule in the future. Permanently. The Consumer Financial Protection Bureau cannot try this again, even if a different administration wants to, even if banks raise fees to $50. The agency is locked out. The $5 cap is dead. It is not paused. It is not under review. It is legally extinct, which means the $35 fee remains your reality. And the Regulation E opt-out you just learned about, that is now the only federal protection you have against this. One phone call. That is what stands between you and $12 billion of bank profit. Banks made $1.028 billion from JP Morgan Chase customers last year. $1 billion from Wells Fargo customers. $335 million from Navy Federal Credit Union members, $266 million from Truist, $260 million from PNC. These are not numbers from 100 years ago. These are the numbers from last year. And they are the numbers banks will collect again this year and next year because they killed the rule that would have changed them. The banking industry's argument was that the rule would have reduced consumer choice and limited access to credit. Their lawyers said it, their press releases said it, their political allies said it. But here's the truth. Regulation E already gives you the choice. You can opt in, you can opt out. The 2024 rule did not take choice away from anyone. It just made the choice less expensive. The banks did not fight the rule because it limited choice. They fought it because it limited their profit. So here is what to do this week. 1. Call your bank. Ask if you are opted into overdraft coverage on debit cards and ATM withdrawals. If yes, opt out. 2. Check your last 12 months of statements. If you see overdraft fees, you have been paying for something you can stop today. 3. Share this video with anyone who lives paycheck to paycheck. 22 million American households are paying these fees. Most of them have no idea they have the right to refuse. The rule that almost saved you $5 billion is gone. The rule that can still save you $35 per fee is right here. Use it. If this episode helped you, subscribe for more federal rules in plain English. Now you know. Use it.